Atlanta Braves Holdings generated $305 million in quarter two despite 6 fewer home games. Yet, operating income swung more than $60 million in the wrong direction. BravesVision helps explain both and what it could mean for payroll. Let's talk about it. Yes, welcome on into a special bonus edition of Braves Today, a production of the Believe Podcast Network and presented to you by FanDuel. I'm your host, Lindsey Crosby, author of the Braves Today newsletter over at bravestoday.com. In case you couldn't tell by that open, we're talking about the earnings call for Atlanta Braves Holdings from Wednesday morning. They announced their quarter two results, their financial results. Reminder, the Braves are a publicly traded company. They are the only publicly traded MLB team, so they are the only team that we get detailed financial reporting on. And at the end of the day, we have some really interesting conclusions we can draw from Atlanta Braves Holdings. But because baseball is not the same as a lot of other industries when it comes to seasonality, we have a little bit of struggles to translate information back and forth. Obviously, Atlanta Braves Holdings generates a large share of their baseball event revenue when baseball games are being played at Truist Park, right? And so if you look at a direct quarter-to-quarter comparison, sometimes it doesn't make a ton of sense. This is one right here. Quarter two of 2026. So April, May, and June, the Atlanta Braves played 34 home games. In 2025, they played 40. So if you're looking at just quarter versus the same quarter a year later, which is the standard in a quarterly earnings call, it's really difficult to draw direct comparisons and understand exactly what happened. So a lot of the notes that the Braves had, that Atlanta Braves Holdings had in here, was about the first half of the year, because that comparison's much cleaner. 39 home games this year, 40 home games the one before. So a lot cleaner of a comparison. This goes back to the fact that Atlanta almost always opens on the road. But this year, they opened at home against the Royals. So those games that were played in March were in quarter one, right? So when you look at just the quarter, you would say, oh no, baseball event revenue was down 11%, until you think about the fact that you had 15% fewer games at home. And so when you look at the first half figure for the Braves, first half of this year versus first half of last year, this year you had one fewer home game, event revenue increased 2%. And on the call, there's a couple of reasons that ABH officials gave for this happening, right? Higher average attendance this year than you had first half last year. Season ticket rate increases, which they go up almost every year, and favorable single game sales, right? All of those things contributed to more revenue and only a small change in revenue, despite the schedule removing 6 opportunities to sell tickets, food, parking, suites, and sponsorship inventory. So when you adjust for the schedule, the Braves actually brought in more revenue per game. When you adjust for the schedule, it becomes a strong revenue quarter. And the ways that Atlanta replaced that missing revenue are exactly what the organization has spent years building. Because, again, 5% higher per home game, roughly, for the baseball events. But other things they did helped as well. Retail and licensing revenue went up 18%. A lot of that, they gave credit on the call to the new City Connects. People loved these new City Connects and purchased a lot of them. Retail and licensing revenue, again, 18% increase to $21.8 million. Other baseball revenue, which is, to explain, there's baseball event revenue, which is games in Truist Park by the Atlanta Braves. There is other baseball revenue, which is events using the baseball facility that aren't Atlanta Braves games. That other baseball revenue went up like 180 something percent because they had 3 Savannah Banana games. They had an additional concert over what they had the same time last year. So less games, but they were able to protect the revenue because they're diversified. The mixed use development, the Battery Atlanta, that stuff is separate from baseball revenue. There's baseball revenue, and then there's mixed use revenue. The Battery and Pennant Park, they keep generating rent all the time. They keep generating parking revenue all the time, regardless of the exact distribution of home games. And visitors to the Battery, the first half of 2026, 4.7 million people. That's up 6.5% year over year. And in the call, they said there were other things that drove that as well. World Cup watch parties, for instance. They had a lot of those in the Battery Atlanta, open to the public. A lot of people came. Those people always pay to park. They shop. They do a lot of things. So the Braves have that diversification built in there. I do want to point out that all the special events, the Battery stuff, it's not just pure incremental profit. There are expenses involved with all of that stuff. So if you look at like when you combine all of those things and you're like, hey, that was like $13 million in additional revenue, that's not just pure profit. They do have expenses that they have to pay for whenever they're using Truist Park for a concert or for a Bananas game and things like that. But the point is, they are finding other uses for the ballpark, for the space in general, and they're able to produce and get more money. And that strategy worked well enough to protect the top line. The income statement talks about BravesVision, and that's where kind of the financial equation changes. We'll talk about that next, right here on Braves Today. Second segment of a special bonus episode of Braves Today, talking about the Q2 earnings call for Atlanta Braves Holdings. And BravesVision is still a bet that is going to pay off in the future, right? Think of it as like an unproven investment, okay? This is the second quarter where we've discussed the financials and they've had to explain the collections system and how the timing is different. And so the financials don't, as of yet, show that this is outproducing their TV deal. So to explain this, under the previous structure, a third-party broadcaster paid the Braves a contractual rights fee on a predictable schedule, right? The Braves collected the check every month, quarter, whatever it was. I think it was monthly. Every month. And the broadcaster carried the cost with production, with distribution, with advertising sales. The Braves didn't have to operate the whole thing. Atlanta now controls all of that as part of BravesVision. The distribution, the advertising, the direct-to-consumer streaming, the programming, the relationship with viewers, all of that stuff. They're using some of their partners, Raycom Sports, Gray Media, to help provide third-party capabilities. But BravesVision is an owned and operated platform whose economics directly sit inside of Atlanta Braves Holdings. Greater control, more customer data, more advertising inventory, direct subscription revenue. The trade-off is you have expenses and you have greater working capital volatility. They actually changed the old broadcasting line item to be media-related revenue. And it's not just standalone BravesVision. It's also national. It's also radio, smaller media items. And that overall media-related revenue number dropped 10% year over year. Now, the Braves said there were Braves ABH officials. I need to be careful how I say this. It's not the Braves. It's Atlanta Braves Holdings. ABH officials said there were a couple reasons for that. And the biggest one, as I alluded to, was the collection of advertising monies. And they broke out the entire collection schedule for us. But in essence, the Atlanta Braves Holdings and BravesVision collects on commercials after they air. And there's a lag there. It takes time from when the commercial airs to when they invoice it to when they get paid. And in essence, BravesVision launched as an enterprise on opening day. And so they're lagging behind in the collections compared to the schedule of payments they got under the old system. So they still believe that it is going to exceed the old broadcasting system. They didn't promise profit parity. They promised revenue parity. And that's something I kind of want to unpack a little bit, because one of the advantages, if there was one, to the old TV deal that they had is the Braves weren't paying for all the stuff themselves. The broadcaster carried a lot of the cost, equipment, staff, advertising, sales people, all of that stuff. BravesVision has that now. The Atlanta Braves Holdings is carrying that money internally. So you have distribution payments arriving on a slower cadence than the old rights fee payments. Advertising obviously pays after the ads run and you invoice them. Direct-to-consumer payments arrive monthly. But you also have expenses, and a lot of those expenses are being front-loaded. Now, one of the questions that came from one of the questioners was about, are those expenses for the most part done? I think this was David Joyce with Seaport Research Partners. And Jill Robinson, she's the CFO, she answered this, and she said that BravesVision expenses are still ongoing, and some of those are going to persist into quarter four. So the Braves are they expect to bring in more money from BravesVision. We haven't seen it yet. They also have more expenses. And so the thing I'm still waiting to see, and it's now the first full quarter of results, the thing we're still waiting to see is, at the end, is this making the same amount of profit, or is this just revenue? Does it match the old deal, right? Are you bringing in the same amount that you got paid under the old deal, or is what you're bringing in minus the expenses you're paying, is that better than the old deal? That's what I'm really waiting to see, and we did not get an answer for that today. Again, they feel good. They said, quote, it's outpacing our early projections, and they said they're confident that it will, quote, replicate or exceed revenue from our prior third-party local rights partner on an annualized basis. But again, that's framed around revenue. That's not framed around profit. The Braves might be able to replace the check. Can they replace the economics behind the check? That's my big question here. And for that, we're going to kind of have to wait. I also want to real quick point out, too, there was a question in there about the league's approach to renegotiating the TV deals after 2028. And I've mentioned this before as my justification for why I don't think that we're going to miss games next year is the fact that if they miss games, they're blowing up that whole negotiation. But how MLB wants to pool all of the TV rights, local and national, together and sell everything through the league office and everybody gets an even cut. And they were asked by my favorite questioner, Barton Crockett of Rosenblatt Partners, about where do the Braves stand on the idea of taking their rights that they now handle through BravesVision and pooling them with everybody else's in the league. Terry McGurk kind of sidestepped this. He's like, there's no firm plan by MLB at this point for any aggregation or change to the local rights. They're open to discussing it. But McGurk did admit, after Barton pressed him a little bit, that this would need to be a 30-team activity, right? This idea of pulling together all of the TV rights into one big negotiation by MLB doesn't work if LA's not in there and if New York's not in there and Chicago's not in there, and Atlanta's not in there, right? They need to have everybody together. So that's a tension we're going to have to figure out in the future. We've got a couple seasons, and maybe there's a middle ground there where the league takes those rights, but one, they pay the Braves additional for them over what, say, Milwaukee gets for their rights, and that maybe BravesVision gets paid a fee by the league to produce those broadcasts. I don't know. This is all speculation on my part. We have no idea what that's going to look like. But another thing that I'm watching and waiting for to find out how this goes, right? It's part of the ongoing question on the bet of Braves Vision. They have made a bet that not only will this help them connect with fans, and by the way, they also mentioned as part of the additional programming, they're going to start doing batting practice. Home batting practice will be streamed on Braves Vision, so that's cool. But also part of the bigger bet onto the economics of the team and Atlanta Braves holdings as a whole. And we saw the profitability of Atlanta Braves holdings kind of drop a bit, and I think it was expected, and I don't think we should panic about it, but let's talk about the details next, right here on Braves Today. Something that the Braves use is a measure called OIBDA, operating income before depreciation and amortization. It's technically different from the usual standard accounting practice of EBITDA, earnings, before depreciation and amortization. And the Braves choose OIBDA over EBITDA. They choose the operating income versus earnings because OIBDA only focuses on expenses directly incurred in the company's day-to-day activities. And Atlanta's day-to-day activities, baseball games, right? That's their thing. Now, OIBDA declined. It dropped by almost $54 million, which took the baseball adjusted OIBDA from plus 52 million to negative 5 million. And operating income, which is a GAAP measure, went from positive 41.8 million to negative 18.5. I don't think this is something you should be worried about. They did not break down what it is. So we're not saying that Braves Vision was the thing that drug this down or everything, but they cited a couple different things like higher major league player salaries, Braves Vision production and administrative expenses, special event expenses, MLB revenue sharing, and then increase like some of the costs for Braves Vision, like sales and marketing, other marketing costs outside of Braves Vision, other personnel costs. It wasn't just Braves Vision, right? Higher payroll, special events, league expenses, that was all in there. And an analyst asked Jill if that was mostly a launch year spike. And she said some of these expenses are going to persist into the offseason. Yes. But in essence, what happened here is the baseball business was mostly able to absorb the launch, the payroll, the event costs. The real estate side, the mixed-use development, did what Atlanta built it to do. Because in quarter two, the mixed-use revenue increased 14%. The mixed-use adjusted OIBDA increased 18%. And the mixed-use operation generated just a little bit more in adjusted OIBDA than the baseball lost. It was a record month for tenant sales. They have 64,000 square feet under redevelopment. They had a 130% increase in replacement tenant sales. And so there is substantial debt involved with the Battery and that mixed-use revenue, the Battery and Pennant Park. Let's just say mixed-use development. And that mixed-use revenue is much smaller than the baseball revenue. It's a stabilizer. It's a cash flow engine. It's not like an unlimited payroll account. But for the first 6 months of the year, the real estate operation almost perfectly canceled out the losses on the baseball operation side. And I think that's the first time I've ever seen that happen. Meaning, like, the Battery is something that can help the baseball side of the Braves run at a small loss. And the thing we've always said for the Atlanta Braves is that they spend what they make, right? The whole way that this works is the Braves spend what they make. This was the first time we were able to see them spend more than they were making, and overall, on an OIBDA measure, come out even because of the Battery. Now, a lot of those expenses were not on payroll. I'm not saying you can't do that in the future, but This was the first time I can remember when the money from the Battery offset losses on the baseball side. But I think for most Braves fans, and if you're not a money person, you've made it this far, kudos to you. I'm very impressed. But I think most people have a question, what does any of this mean for the roster? Let's talk about that next, right here on Braves Today. Final segment of Braves Today, Lindsey Crosby doing our quarterly breakdown of Atlanta Braves Holdings financials and what this means. We'll have a corresponding article coming out with this. Hopefully today, probably, maybe this afternoon or this evening, could be in the morning, not 100% sure. But let's talk about payroll and what all of the stuff I just said, the extra expenses with BravesVision, the lack of collections matching what they were doing before, the extra mixed-use development money, what all of that means for payroll. One of the explicit reasons they gave for baseball cost increasing was higher major league player salaries. And so I do think that you can see the Braves did not sacrifice spending on the roster just to pay for BravesVision. I think that's takeaway number one we can make here, is that there were costs associated with BravesVision, but they didn't tell Alex Anthopoulos, you can't go sign free agents so that we can pay for that. I think that's thing number one. And that is, obviously, that is a good thing. There's been teams in the past, and I remember specifically this happening with St. Louis recently. They wanted to increase payroll at the major league level. And so they actually had to cut back on other spending in the organization to find the money to pay for it. This is something where the Braves wanted to do BravesVision. They did not want to restrict the baseball side to do it, or I guess the player payroll, and so they didn't. And because they have the Battery, it's a profitable, diversified business that's outside of MLB's baseball revenue streams, and therefore not part of revenue sharing from the league. Anything that they make from the Battery Atlanta, from Pennant Park, all of that mixed-use development, they keep that money. Whereas baseball event revenue from the games, that is subject to revenue sharing. And then BravesVision gives potential upside through advertising, through streaming, through distribution, but so far, it is still also putting extra expenses onto the balance sheet. What we don't know is BravesVision's subscriber counts, margins, its individual profit, a comparison between it and the old rights fee. We don't know that. And we can't just say, hey, if you made this much more in revenue, you should have this much, that exact same amount in additional payroll capacity, until we know about operating costs and debt service and taxes and capital needs, working capital, all of that kind of stuff. And like the actual payroll question for me here, after BravesVision pays for production, distribution, sales, administration, floating the timing gap on collections, does it leave the Braves with more usable cash than the old TV contract did? We do not have the answer to that yet. Again, they've told us that they believe their projections show from a revenue perspective, they should have parity with the old TV deal. But revenue is not profit because they also have expenses. And we don't know, and I think it's safe to remain skeptical of, will they get to profit parity? I'm not worried about the organization's liquidity. They have cash. They have borrowing capacity in different facilities that are set up through MLB. But there's just information that we don't know about BravesVision's impact. We don't have a full year of media-related revenue, and we're not going to because they launched this essentially April 1st. We don't have any disclosed expense or contribution figures towards the bottom line. We don't know direct-to-consumer subscribers. We don't know churn. We don't know average revenue per subscriber. And we don't have any evidence that the incremental media cash is translating into sustained major league payroll capacity. So again, this is an investment. It's not yet paid off. They believe it will. We just haven't seen it yet. Couple other quick hitters from the earnings call before we get out of here. One of them, Mike Plant, who runs the development side, the mixed-use development side, he said that there's a C2M tax issue. I wrote about this a year or two ago, where in essence, you can write off the salaries of certain highly paid, highly compensated employees, and for the Braves, it's some players, that Atlanta will not qualify for if this tax change goes through. They express confidence that there's going to be a legislative or regulatory solution to this, and that Atlanta being excluded in that tax change is an unintended consequence that's going to get fixed. That part of this show is going to be interesting to about 15 people. I wrote about it like a year and a half ago. Every now and then I get one of those people reach out to me and ask about it. That is the update on Section 162M. Postseason revenue, they confirmed that a deep playoff run, that's all going to go into quarter four. So that's all extra, right? We can look back at prior years as a baseline to see roughly what that could produce for the Braves. But we also have to understand current pricing, current monetization options are stronger, are better than in previous years. So let's say the Braves play 8 home games in the postseason this year. It would stand to reason that they would make more money than 8 home games that they played in 21, right? And so when there are people, this is a little side note, when there are people who say that the Atlanta Braves don't care about winning in the postseason, they directly acknowledge today the better the team is, the more they win in the postseason, the more money they make. And if you are a cynical person who is of the perspective of all they care about is making money, which I do not think is true, but if that is your viewpoint, then they were asked and said up front that they want a deep playoff run and acknowledged that a deep playoff run would produce more money, would make them more money for the company. And even after you look at the cost to put on these additional games and everything, it would still be additive versus not being there. Because here's the thing we don't realize. One of the largest expenses on the baseball side is the players' salaries. They don't earn their salaries in the postseason. There is a compensation structure. It is put into place through percentages of the gate, right? There's a negotiated amount of the baseball event revenue that the players get from the postseason. The deeper you go, the more home games you play, the more baseball event revenue you get. And then at the end of the year, after the playoffs are over, when you hear players talking about full share, half share, all that kind of stuff, the players get together and decide how to distribute the money, right? Who gets a full share of it? Who gets a partial because they were here part of the year? Do you reward people inside the organization who aren't players, right? Clubhouse attendants or medical trainers or whatever. But they don't get paid their salaries. Juan Soto's not making $68 million in the postseason. He's making the same thing everybody else gets. He's making the same cut that the rest of his teammates vote to be a full share, right? Postseason games are even more lucrative for the organization because they're not having to pay salaries. They're all going to be sellouts. Prices are usually higher for postseason games. There's more concessions purchased. There's more retail and stuff purchased. And the expenses are lower. And then the last thing is all these special events, right? I know we got tired of the Braves Country Fest ads, but things like that materially increase baseball revenue. Now, there are some operating costs with those, but things like that help cover for the launch of BravesVision. And things like that can start contributing directly towards payroll. So it's good to know. Quarter two for me, wrap this up here. Quarter two for me showed that Atlanta Braves holdings can protect their revenue even when the home schedule works against it. The Battery Atlanta grew, merchandise grew, special events grew. BravesVision's direct-to-consumer launch is ahead of plan, reportedly, but control of their broadcast rights has a cost, and that cost is now part of the company's permanent structure. BravesVision's given them more ways to make money and more responsibility for the expenses, the timing, the risk behind it, and the next couple quarters will tell us whether that control, even after you pay all the bills, produces income or if it's just revenue neutral. That'll do it for a special bonus edition of Braves Today here on Wednesday. Please like the video, please subscribe, and we'll see you next time.